All right. Good morning, everyone. Tim Davis coming to you guys with a midweek market review. Doing this kind of early because of what I noticed in the VIX yesterday and because of where my schedule is the rest of this week. But did anyone else notice the movement of the VIX yesterday? I've been watching it very carefully and closely, and specifically been paying attention to the short-term action to see if it's a precursor of what's to come longer term. So again, today is Wednesday, May the 17th, 2023. It's now about 5:20 in the morning. But yesterday, I'm going to draw this out just a little bit. This is a 15-minute chart of the overall movement of the VIX since about last week, since last Tuesday. And since last Tuesday, you notice, and this purple line is going to be my 50-day moving average, and then the red line is my 200-day moving average. And we're going to look at this in multiple time frames to show you guys how the VIX has been moving. So we see this crossover last week, this 15-minute chart with the 50-period crossing below the 200-day moving average. So with that said, I was expecting the VIX to stay muted in the near term until VIX finally starts to really take up a big rally and a sustainable rally above this 200-day moving average again. We just got that on yesterday. So since last Tuesday to this Tuesday, looks like the VIX is ready to make a sustainable move. By looking at this 15-minute chart. Now let's fast forward and get closer to the day. So again, looks like VIX is ready to come out of the basement. You see the 50-period moving average crossing back over the 200-day moving average earlier part of yesterday. And with that move, not only did we see the 50-period moving average, simple moving average line crossing back above the 200-day moving average line, we're seeing a retest of this 50-period when price action jumped above this area too as well. And look what happened towards the end of the day. We got a sustainable big bounce on a 15-minute chart with the 50-period still well above the 200-day moving average. So that is a positive sign for the VIX, negative sign for overall markets. Now, let's bring it into a here and now. Now let's switch to, I'm going straight to a daily chart and a weekly chart. So you got what the outlook looks like there. All right, now here's our daily chart with the VIX. So still below 50-period moving average, still below the 200-day moving average and 50-day, but a sustainable move off the bottom. Told you guys pay attention to this range, highlighted range. We got a big bounce from the 15-hour level on VIX back at the beginning of May. And we bounced right back up to that 50-period moving average and came right back down. Where to? Not down to this ultimate low, but we created a higher low. A higher low. So from one low data point to a higher low, pretty much settled down here, found support, and starting to move back up. Starting to move back up, folks. The VIX is showing that it's ready to make a move higher, even on this daily chart. Look, we've been hovering around oversold area for quite a bit, so it looks like we are ready to get this sustainable move higher. All right, so that's what they're like on the daily chart of the VIX. And now I'm going to draw your attention to a VIX weekly chart while we're here. There's a VIX weekly chart. Look at what's happening with some of the oscillators lower. Look at the RSI, how it's starting to curl upward on this weekly chart. So slowly but surely, in a quiet manner, the VIX is showing that it's ready to come out of the basement. Not positive for the overall markets, folks. Full stochastic is still in oversold territory, like it's about ready to come out of the basement. Wins percentage, oversold territory is starting to rise even on the weekly chart. And it's been also has been rising since the beginning of May. VIX is slowly but surely starting to curl upward. So we got to see how that continues to play out over the coming weeks or so. All right. Now, before I hop any further, now I'm going to draw your attention to the dollar, because the dollar also did something amazing this past week. And I told you guys pay close attention to the dollar, because a big rise in the dollar is also going to be negative for our markets overall. So one thing that the dollar did on yesterday is that it found a way to get it moved back up towards 103. 103, folks, that's a big move for the dollar, because if you look, this is a weekly chart. Okay, the dollar has been, it's not struggling, but dollar has been found some support back around this $100 level, or close to this 101 level. Well, back in February, rallied up from February to about middle of February. I mean, end of January, in the middle of February, back up to this 50-day moving average. Got rejected. Where to? Back down to this 101 level. Found support again, creating a double bottom. And now look what it's doing now. It's rising back up, making an attempt to head back up towards the 50-day moving average for a second try. Now, it took about a couple months, but it's like it's ready to do that again. And now we got to move, almost a move back up towards the 103. We're actually at 103 now. Struggle to get above 102 for a while. Now we're firmly above 102 and pressing on 103. That's negative for overall markets. Just keep that in mind. This dollar rise and the VIX rise is not positive for our overall markets. Now let's switch back to a daily chart. Look at that. After all of this consolidation, after we broke down below this 50-period moving average on a daily chart, all of this consolidation, look at this indecision. So all this consolidation down here, these indecision candles, and then all of a sudden, back up above the 50-day, consolidated a little bit, and we got a big, strong green candle right above the 50-day moving average on this daily chart. Again, positive sign for for the dollar and the VIX, negative sign for overall markets. All right. If that's not enough confirmation to show you that the markets may be in store for a move down, we'll look at the SPXA, which is a tool that I'd like to use to track overall market sentiment. The SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. It took a negative turn low on a daily, another negative turn low on a daily. And now firmly below the 50 level. The 50 level is what I normally watch for any type of reversal point or sustainable move to the up or the downside. So we've been below this 50 level and this SPXA 200R for quite a bit. And now we even took another leg lower. Now we have hovering around 40, 42 on this daily chart. So 42% of S&P 500 companies trading below, above the 200-day moving average, 42% trading above the 200 moving average. That means we have about 68% trading below the 200-day moving average. So that's negative. Again, that's negative for overall markets. And so that's something to keep an eye on. And if I was to blow this up to a monthly chart, look at that, folks. We're starting to get, the bears are really starting to find a way to sink their teeth into this price action. Get rid of, okay. So we're definitely starting to see some weakness in overall price action in the market, with the sentiment starting to turn more and more negative as we go from week to week to week. We're starting to get this strong movement to the downside in overall sentiment. Look at the oscillators and the wins percentage, definitely heading lower. Oscillators and full stochastics definitely heading lower. RSI definitely turning downward in overall sentiment. So overall sentiment is definitely negative. So look for any bounces we see now to start to continue to be met with fierce resistance and selling, like I told you guys before in previous videos over the past week or so. So that is a look and what markets are showing us in the near term and the longer term. Definitely price action is starting to be negative. Here's a weekly chart of this SPX 200R tool. And as you can see, every time the sentiment tried to get positive, we get that pushback. We jumped above this 200-day moving average at one point and just got met with fierce resistance. Came back up to challenge the 200-day moving average, couldn't break back up even above it this time. Just came right back down to the 50-day moving average on this tool. So again, overall sentiment is definitely negative, folks, and it looks like it's about to get even more negative in the near future. All right, now let's take a look at the overall markets. And I'm going to actually look at the futures market. I'm going to show you guys who the futures are trying to fool us and let us think that we're about to see. So let's start with the Dow Jones futures. Okay. You look at the Dow Jones futures, as you can see, as markets are moving right now, it's trying to show a little positive action, but I think this positive action is going to be met with some fierce selling. I'm going to switch this back to a daily. While we're here, daily here. All right. I'm going to show you guys something on a 4-hour chart of the Dow Jones futures. And we didn't see this crossover yet in the cash market, but look at the negative crossover, bearish crossover in the moving average lines that we've seen on the negative on the Dow Jones futures, and that was on Thursday of last week. So we got the 50-day moving average that crossed back below the 200-day moving average. That is a negative sign for overall markets, folks. We have not seen that in the regular cash markets yet, but in the futures market, we've seen that crossover with the 50-day moving average crossing back below the 200-day on last week, which is a negative sign for overall markets. And that is on our daily chart. And since then, we've just been trending lower every time we, Dow's tried to get this move back above this level. It keeps getting muted by the 50-day moving average now. Here, back down. So what I suspect to see is we could see another lower rally before the market's open. I'm looking to see this 50 moving average starting to curl lower on this futures, and then it would bleed over into the cash market as well. Here is a look at the S&P or S&P E-minis, S&P futures, and it's just starting to get its negative crossover right around here. So we see that the bulls are fighting to keep this 50-period moving average above this 200-day, but it's like it's starting to fail. It's like it's not going to win this battle. So I'm looking for an even deeper move below the 200-day moving average on this futures chart. I mean, a deeper move for the 50-day moving average below the 200-day moving average here in the near future on this futures chart. Last of the Mohicans, I think the NASDAQ has been a little bit stronger. It was a nice strong move above its 200-day moving average, but look at these strong red candles that are starting to form and starting to show some chinks in this armor too. Nice move up here, boom, big red candle here, back down. Nice move up here to challenge it, but look what it's doing. Trying to challenge it, but run into this resistance up here, and boom, it's starting to trickle lower. And look at the oscillators and the wins percentage. Now coming out of the overbought territory, starting to trend lower. RSI starting to trend lower. Full stochastic is getting ready to start to trend lower. So it won't be long, folks, before we start to see the NASDAQ start to accelerate also and start to give up some ground. Looking for the NASDAQ to drop back below. NASDAQ futures drop back below this 50-day moving average, and eventually 50-day moving average come down here to challenge the 200-day moving average. I think that's what we're about to see here in the near future. Look at the Russell futures. continues to look weak. Same thing with the Russell futures. It's been trying to keep its head above water, but it's been very unsuccessful. Russell futures, it remain below its 50-day moving average. We got to see what happened with this Russell. It's been trying to come out of the basement for quite a bit, but it keeps failing. Got to move back up towards this 200-day moving average on this Russell futures chart, but keeps getting rejected. Every time, strong move keeps getting rejected. Another rejection here. Now it's back below its 50-day moving average. Any stronger way. So does it get another retest? We have to wait and see. But I think what I'm really watching for, folks, is a huge breakdown in the Russell futures. Not only Russell futures, but let's draw your attention to the regular Russell 2000 index. Folks, I've been really harping this for the longest. Is that, let me switch to a weekly chart. And this Russell still looks extremely weak, and it cannot really have a sustainable rally higher. It's hovering on this weekly chart right below this 50-day moving average right below this 50-day and the 200-day moving average on this weekly with a crossover on the weekly chart. With the 50-day crossing below the 200-day moving average back in March, and it's starting to see some separation of the two. The 50-day moving average and the 200-day moving average on the weekly chart starting to show a little bit of space between the two. That's very negative for overall markets. So this line here, folks, this trend line here represents the highs of 2020. And like I said before, if we see the Russell crack that level, watch out below, because then overall markets are really going to start to be strongly in favor of the bears. So that's a key level to pay very, very close attention to. Russell cracks that level, it won't be long before overall markets start to see that same type of weakness. All right. Again, pay close. Keep your eye on the dollar, folks. Keep your eye on DXY, because it is truly trying to make a strong move for a case. Strong case for a move higher. Again, here's a weekly chart of DXY. It looks extremely strong. At 103 level, it's like it's one that it wants to try to really, really ramp up and take out and continue that move higher. And then on our VIX, again, pay close attention to this VIX. See that strong pop towards the end of the closing yesterday. And again, looking at the weekly chart. It has a sustainable move above its 50-day moving average. All right. So hopefully, folks, this is some information that is useful. Pay close attention to what's going on within these overall markets. Really keep your eye on the dollar and the VIX, because it's going to give you an advance warning as to what's to come. And keep an eye on the Russell. The Russell, that's the one that's going to break down first below those highs of 2020. And then, so those three things, keep an eye on, and you should be able to navigate through this market with ease and trade your positions wisely. Till the next video, I'll catch you guys later.